Good morning, everybody, and welcome to the Daily Energy Markets podcast, February 8th. And we see the oil markets in Asia trading a little bit up. Brent is at 92.81 this morning, and WTI a little bit behind at 91.45. That sort of $1.50 spread between the two is holding in there. Let's kick off this morning, as I like to say in my little tweet, we've got Sydney, Saudi, and South Beach all together in one half-hour session. Can't beat that. Let's go across the world to Sydney, where Peter McGuire, CEO, XM Australia, at least amongst this room, has the closest view of the Olympic Games, but still, I suppose, a distance from Bondi Beach. Peter, the year has started off a little bit soft in China. Of course, everything built around the Olympics. How do you see the first quarter vis-a-vis China, with the Olympics sort of sitting right in the middle of it? It's been a slow start running into it. Where do we go after? Your thoughts?
Well, good morning, everyone. Greetings from Sydney. Yeah, it has been a slow start, certainly, Sean, and where we're sitting as far as, equity markets. I think the shine has certainly been on commodities and what we've seen as far as price spikes for crude and a number of those major other markets. So I think the jury's out. We've had the Olympics, we've had Lunar New Year. China hasn't really engaged this calendar year or our calendar year. So it's been a slow start, but I think they'll come out of the blocks fairly quickly come, say the early part of March, and the overall momentum to the upside, strong demand from crude, and overall, healthy economic situation moving forward. So I'm not expecting surprises. Building on what Mike said from a geopolitical stance and Putin and Ukraine, well, that changes the whole global scene. And we all understand the position as far as inflation, what the story is there. It's red hot, and what goes on as far as Fed and central banks' agendas moving forward.
Well, on that point, Peter, how are the equity markets in particular currently digesting what seems to be every week yet another added rate rise for 2022 added to the bucket? And yet, the markets are certainly volatile, but it's not knocking it over, so to speak.
Well, no, not yet, Sean. But I mean, that is, it's been bid up nearly every week because you had, 3, 4, 5, and then we had a possibility, and Jamie Dimon came out and said, well, maybe 7. So there's an 80% chance you're going to get lift off in March, 20% saying it's going to be a double hit, 50 basis points. So, as far as Powell's concerned, what goes on, we've got the inflation read coming out in a matter of days. The crude market is certainly worrying them from a price perspective and what impact it has to the consumer. And then you've got I'll listen to the interview this morning, Jeff Curry, just absolutely on fire. That was a number of hours ago. And, the critical shortfall you've got across all commodities and, base metals, and certainly from a demand side, very, very strong appetite globally for crude. So, yeah, we don't see demand destruction at the moment. I'm not seeing any, anything negative. So I think we're marching towards 100. Unfortunately, great for producers, but not too good for consumers, Sean.
Peter, just I'd welcome your thoughts jumping in there from the point of view of the outlook for the Ukraine crisis. Does it feel like the markets are pricing that in from your perspective sitting in Sydney? How big a deal would it be for the markets if indeed it happens, as the American government is telling us every day that it will happen?
Well, I think, it's a tough one to even think through, Sean, what impact it's going to have. I mean, Mike's sitting closer, from a state's perspective. Australia's very much out of that, I think.
Yeah, but we do have China giving Putin fairly robust support. I mean, he's standing with a fair wind at his back from Beijing.
Absolutely. Got a wet sail and strong wind in his wet sail. So as far as Australia's concerned, we're just sitting here observing. From China's perspective, yes, there seems to be a lot of push, and it'll be interesting over the next matter of weeks where Mr. Putin plays it. And if it's building on what Mike's suggesting, then we could well be in some form of situation by this time next month, or maybe to the middle of March. Who knows? I'm not expecting anything to escalate over the Olympic period. Who can tell? But what impact that has naturally to energy prices and to US dollar, and of course to equities, is going to be, I think, more volatility in the short run and big price moves. This changes the game considerably if Putin gets involved, because we haven't really seen anything in my lifetime where Russia's actually been, gung-ho in invading. I know they've done, they've certainly been aggressors, but this changes, I think, the footprint in everyone's viewpoint.
Peter, looking at the currency outcome of all of this, obviously we've been through a very robust dollar strengthening cycle. Now we seem to have a pause. Where does it go from here, and what are its implications, do you think?
Well, Sean, what we've seen since Christmas has been dynamic as far as trading. We're at 97.4, I think only a couple of weeks ago, or a week and a half, that US dollar index. And then it got spanked down 95.6 at the moment. So it's given up a lot. Very strong move to the upside for pound and euro. So it's been a trader's delight. Where we move from here, I think a little bit further softness for that US dollar in the short term, though that does impact as far as if Putin moves quicker, then that's certainly going to, I think, push US dollar higher.
Would that be a natural flight to safety play, do you think? Anything crisis, this thing escalating?
I think so, Sean, absolutely. And naturally, if you see the US dollar shoot, then that could take a little bit of that heat off as far as some of those commodities. Keep an eye on gold also, and a couple of the other precious. But where I think the US dollar will continue, a bit of softness, it was exhausted to the upside. It's going to whipsaw, and I think it'll be it's a high 90, mid 95s to say 94.8 over the next couple of weeks. I think we're all sitting here waiting to see what Jay Powell says, and the inflation read this week, and just the overall global.
I mean, putting aside Ukraine, Peter, is this a currency, the direction of currencies, the major pairings based on who moves most first in terms of rate cycle? Obviously, the Brits moved. Yes.
Well, the Brits have moved, Sean. They've had two runs at it. We're still waiting for Jay Powell. There's very little chance that anything's going to happen out of Eurozone. So there's the storyline there.
But at least they're talking about it now.
Well, yes, they are. They're talking, but they're not going to be Action Jackson like what Jay Powell's going to be. And if you think of Jamie the other day, said Jamie Dimon, you might see 7 rate rises this year. Wow. I mean, he might front load. Who knows? I mean, I only listened this morning. Remember, you put your mind back to Alan Greenspan. I think it was 2000 or 2002, where he did 50 basis point hit. So he double loaded, and that'll be 20 years. So maybe Jay Powell comes out swinging. There's a 20% chance that he'll do that.
I mean, it seems to me that if there was ever a time to do it, I don't know, everything's counterintuitive these days, but it seems to me that all the pieces of the puzzle are you front load here. It's not about how many times you do it, it's how big it is each time. Mike McGlone, thank you so much. Not in South Beach. Peter McGuire hasn't been to Bondi Beach in ages, I'm sure. Well, Mandy, soon to have Naomi Beach or whatever the equivalent may be. All the best. See you every morning, 10:30 UAE time. Thank you.
Thank you all.
Thank you, guys.